noise and give you that deeper understanding of the critical global info. Today, we are taking a look at yesterday's intelligence brief. That's Friday, August 15th, 2025. And it's quite a packed one. Lots going on with climate, the economy, and some pretty big geopolitical moves.
Exactly. And the overall classification for the brief was a moderate threat level, which means, while there wasn't one single huge red alert, it's the mix of things, the convergence that really bumped up the potential for instability in various regions.
Okay.
And source-wise, we had what's called an Admiralty Code B2. Basically, that means we're relying on really solid public sources, government releases, major news outlets like Reuters, AP, stuff you can verify.
So high confidence in the reports themselves.
Yes, precisely. Confidence level 2.
Right.
These reports aren't just from good sources. They've been checked and confirmed across different channels, well corroborated.
Great. So let's dive in. As we look at yesterday's brief, the climate picture seems, well, pretty stark. Systems under huge stress globally. You highlighted some really unprecedented stuff.
Yeah, what jumps out immediately is just how strained emergency systems are globally.
Yeah.
In Southern Europe, you had those wildfires sweeping across Greece, Spain, Portugal, Albania, Montenegro.
Right.
Really tragic. 3 firefighters lost their lives. But the thing that really shows the scale, the EU Civil Protection Mechanism.
That's the coordinated response system.
Yes. It pools resources for big disasters. Well, it was activated 16 times simultaneously. That's the highest ever recorded. It's a clear signal that systems are just stretched to their absolute limit.
16 times. Wow. And then halfway across the world, Asia.
Yeah. Tropical Storm Podul. It hammered Taiwan and southern China.
For real.
Caused massive transport disruption. Over 140 people injured. Beijing had to step in with disaster relief funds, about $430 million.
So is this, are we seeing a fundamentally new pattern here where these separate climate events are now combining to stretch global resources thin? Or is it just that we're better at reporting it now?
That's a really important question.
Yeah.
And while, reporting has improved, the data strongly suggests this is, a new reality. These aren't just isolated incidents anymore. They're creating this complex, multi-directional pressure.
Okay.
The immediate impact, obviously, is on emergency resources needing that cross-border help. But the ripples are already hitting infrastructure, global supply chains. You could see the urgency on social media, too.
How so?
Well, you had hashtags like #PrayForGreece trending. And in China, after the flooding, lots of calls for better urban drainage. People are seeing the systemic weaknesses. Basically, yesterday felt like the planet was, quite literally on fire and underwater at the same time.
A grim picture. Okay, shifting from that immediate human and infrastructure cost, let's look at the global economy. Yesterday's signal seemed, complex, contradictory even. This is where it gets really interesting, I think.
Yeah, it was a mixed bag. So in the U.S., the main thing was the Producer Price Index, the PPI.
Right, what producers are charging.
Exactly. It tracks prices before they hit us as consumers. It rose 0.9% year on year in July. Now, that specific number matters because it immediately sparked concerns among investors. They're worried the Fed might delay interest rate cuts.
Ah, okay. And the market reaction?
Mixed, really. Intel shares actually went up 4%, but Amazon dipped 1.4%. So no clear direction there based on that news alone.
And yet, over in Europe, markets hit 2-month highs. That seems like a totally different story.
It does, doesn't it? That was largely driven by some really strong half-year earnings reports. Admiral Group, the insurer, saw profits jump, get this, 69%. Huge. And Aviva also did well, operating profit up 22%. Those kinds of numbers definitely lifted the European indices.
Okay, so that's a fascinating split you've just described. Europe's markets are flying high on corporate earnings while the U.S. is biting its nails over producer prices. How sustainable is that? Are European companies somehow dodging global inflation, or is this maybe just a lag?
That really is the billion-dollar question, isn't it? And honestly, it's probably too early to say they've completely decoupled. Yes, we're seeing strong earnings in certain sectors, like insurance, but that contrasts sharply with underlying inflation pressures and elsewhere signs that consumer demand might be slowing.
So what are investors doing?
It looks like a cautious rotation, moving into more defensive stocks, things seen as more stable, perhaps, looking for safety. You saw this reflected online, too. European investors were pleased, sure, but also adding notes of caution. Don't get too carried away. Meanwhile, fintech watchers were pretty excited about Nubank's performance out of Brazil, another strong emerging market story.
Nubank, right. We'll probably touch on that later.
Yeah. And look, making sense of this kind of complex, nuanced economic picture, it really needs deep, reliable data. That's precisely where having robust intelligence tools comes in, like the platform from NextSite, Site Connect. It's what powers these reports we're discussing. They specialize in pulling together all that fragmented open source info, verifying it, and turning it into something actionable for their clients. You can check them out at www.next-site.com.
Okay, good context. Let's turn to geopolitics now. The Middle East, as usual, remains a major friction point. Yesterday's brief had some pretty significant updates there.
Yes, a particularly striking one was the move by Israel's far-right finance minister, Bezalel Smotrich. He publicly pledged to restart that controversial E1 settlement project near Jerusalem. It's been delayed for years.
And he was explicit about the intent, wasn't he?
Very explicit, said it would essentially bury the idea of a Palestinian state. Now, it's important to note this specific report came with a C3 flag.
Okay, what does C3 mean for us?
It's our internal flag, indicating the source might have a known political bias, like a specific minister making a statement, or that the information hasn't been officially confirmed elsewhere yet. It just means we treat it with an extra layer of caution and look for corroboration.
Got it. So consider the source and the reaction.
Swift condemnation from the UN, from the U.S. State Department. Both said it undermines the two-state solution, violates international law.
And at the same time, the situation in Gaza.
Intensified Israeli strikes continued in eastern Gaza City. Reports indicated at least 11 people were killed. This was happening even while Egypt was hosting Hamas for ceasefire talks. And the humanitarian crisis, it's just dire. Hunger-related deaths reported in Gaza have reached 239 since the conflict began.
Just awful numbers. Meanwhile, what's happening with Iran?
Well, there seems to be an internal debate shaking out within the leadership. This follows those recent U.S.-Israeli strikes on their nuclear facilities. The chatter from insiders suggests that Supreme Leader Khamenei might now actually be leaning towards renewing nuclear negotiations.
Despite hardliner opposition.
Despite significant hardliner opposition, yes. So that internal tension within Iran, particularly after those strikes, just adds another layer of unpredictability to an already volatile region.
Okay, shifting continents now, over to Africa. There was a really interesting cultural and political statement coming out of the African Union.
Yes, the AU endorsed the Correct the Map campaign. This is fascinating. It advocates replacing the standard Mercator map projection, the one we usually see.
Which distorts sizes, right. Makes Greenland look huge and Africa smaller.
Exactly. The Mercator projection seriously shrinks Africa visually. This campaign pushes for the equal Earth projection instead. It gives a much truer representation of Africa's actual massive size. It's about countering those old colonial legacies embedded even in how we draw the world.
It really makes you think how a map shapes perception. Powerful stuff.
It really does. And sticking with Africa, but on a legal front, a major development in South Africa. Environmental groups won a significant court case against Total Energies and Shell.
What was the issue?
Their offshore exploration permit was rescinded by the court. The ruling basically said the companies hadn't done adequate climate and socioeconomic impact assessments. Big concerns were raised about oil spill risks and also about whether local communities had been properly consulted.
So a win for environmental accountability.
Definitely. It sets quite a precedent, potentially, for how these big energy projects are evaluated, especially regarding community impact and climate risk.
Okay, and briefly, Latin America. There was something about mining in Argentina.
Yeah, Barrick Gold and Shandong Gold apparently submitted plans for a $400 million expansion of the Veladero mine. They're looking to use Argentina's investment incentive scheme to boost production. But, worth noting, this one also carries that C3 flag. Official confirmation is still pending, so it's hearsay at this stage, something being talked about but not yet formally announced.
Got it. So it still requires verification.
Right. And you saw the reactions play out online across all these stories. Israelis and Palestinians arguing fiercely over the E1 settlement plans, really harrowing personal stories coming out of Gaza, intense debate within Iranian circles about the nuclear talks, huge excitement in Africa about #CorrectMap, environmentalists cheering the South Africa court ruling, and maybe predictably some skepticism in Argentina about whether that potential mine expansion would actually create local jobs or just benefit the corporations.
A real spectrum of reactions. Okay, let's move beyond the sort of immediate headlines. Yesterday's brief also shed light on some key shifts in global business and technology, things shaping the future landscape. What caught your eye there?
One really significant trend was about Chinese companies. We saw reports they shifted billions, literally billions of dollars in investment into Indonesia just to the first half of this year, 2025.
Why Indonesia specifically?
primarily to get around high U.S. tariffs. The thinking is they can manufacture in Indonesia and then access the U.S. market from there under Indonesia's lower tariff rates. For anyone tracking global manufacturing or logistics, this is, well, it's huge. It shows companies actively redrawing supply chain maps to deal with geopolitical risks like tariffs. It raises a question for listeners. Are your supply chains ready for this kind of rapid shift?
A major strategic move. What else?
Cybersecurity. Accenture made a big splash, announcing its largest ever cyber acquisition. They bought the Australian firm CyberCX.
That's a big name in the region, CyberCX.
It is. Adds about 1,400 cybersecurity professionals to Accenture's ranks, plus their AI-driven platforms. It's a clear move to really beef up their managed security services, especially in the Asia-Pacific market.
Shows where the investment priorities are.
Absolutely. Then, staying down under, a bit of a reality check on the energy transition. Origin Energy's CEO reportedly warned that Australia's shift to renewables is proving slower and more expensive than they'd hoped, meaning their big Airing coal power plant might need to run beyond its planned closure date in 2027. Now, this report was also flagged C3. No public official source was available for this specific warning just yet, so it's something to keep an eye on, needs confirmation.
Okay, one to watch. And on the health front.
Big news for South Africa. Novo Nordisk launched Wegovy there. That's their blockbuster obesity drug. They're clearly targeting the country's high obesity rates and going head-to-head with Eli Lilly in that lucrative market.
Right, the pharma giants battling it out.
Then, in agriculture, some good news for Brazil. Saudi Arabia and Chile both lifted their bans on Brazilian poultry imports.
That was due to the avian flu outbreaks, wasn't it?
Exactly. Those markets had been closed off. Reopening them is worth hundreds of millions of dollars to Brazil's poultry sector. It's a good example of how quickly trade flows can snap back once those sanitary restrictions are lifted.
Okay, and one last business note.
Just quickly, Australian bank ANZ Group put out a trading update, showed rising net loans and customer deposits, suggests a degree of resilience there, even with consumers facing high living costs.
Interesting.
And again, social media kind of mirrored the complexities. Indonesians welcoming Chinese investment, but also voicing concerns about becoming too reliant. Aussie cyber professionals hopeful about jobs post-Accenture deal. Heated arguments over Origin's coal plant comments. Environmentalists were definitely not happy. And in South Africa, lots of talk about Wegovy, the ethics, the cost, but also relief about having new treatment options. It just underscores, again, how vital it is to have reliable, verified intel to navigate these interconnected global trends. That's the kind of capability Nextsight offers, tracking, corroborating, connecting that data across borders to build actionable strategies.
Okay, so we've covered a lot of ground: climate, economy, geopolitics, business shifts. This brings up the big question, right? How do all these seemingly separate events actually connect? Let's try and zoom out, see that bigger picture. When we analyze the brief this way, what correlations jump out?
Yeah, zooming out is crucial, and several strong connections emerge. First, let's look at climate and markets. What's really interesting is how these local disasters, the fires in Europe, the floods in China, created different pressures on global commodity markets. So European wheat futures went up 1.2%, presumably on fears of crop damage from the fires. But coal prices actually went down, partly because Chinese demand likely dipped due to the flood disruption.
So climate change isn't just one uniform pressure.
Exactly. It's not a simple inflation story. It's this complex, multi-directional stressor on supply chains. You need granular analysis to really grasp it.
Okay, what's the next connection?
Let's link economics and equity. You had the U.S. PPI rising 0.9%, suggesting inflation stickiness, while Malaysia posted strong 4.4% GDP growth. Divergent signals. And this played out in the markets. The S&P 500 was basically flat, while European markets rallied on those strong earnings we talked about. This isn't just random variation. It strongly suggests investors are actively rotating into defensive sectors, thinking insurance, healthcare seeking stability in an uncertain global picture.
Makes sense. And geopolitics, how did that ripple outwards?
Geopolitics and energy prices, that's a classic link. The tensions in the Middle East-Israeli settlement plans, the ongoing Gaza bombardment, they raised fears of wider conflict. And you saw Brent crude nudge up towards $86 a barrel. Plus, that internal debate in Iran over nuclear talks. That also played into oil futures. Traders were pricing in a tangible geopolitical risk premium.
So instability translates directly to market volatility.
Directly. Then there's investment and trade. Those U.S. tariffs are clearly forcing supply chain changes. Chinese firms moving to Indonesia isn't just tweaking things, it's a major strategic response. It shows how aggressively trade policy is forcing businesses to rethink their entire global footprint, moving away from single points of failure.
Towards more agile networks, maybe.
Exactly. And at the same time, you see the Brazil poultry example. Saudi Arabia and Chile lift bans, and boom, commodity flows change overnight, impacting Brazil's economy. Shows how non-tariff barriers like sanitary rules are also powerful levers in trade.
Okay, final connection.
Corporate performance and risk. On the one hand, strong earnings from insurers like Admiral and Aviva or fintech like Nubank, they boost confidence, especially in sectors with predictable revenue. But you also see vulnerabilities flagged up, potential transport strikes like Air Canada, or the struggles Origin Energy faces with the energy transition. These remind investors about operational risks that can sideswipe even profitable companies. The takeaway: even when earnings look good overall, you have to stay vigilant about sector-specific risks.
That's a great synthesis. Okay, so pulling it all together, what does this mean for you, our listener? How can we actually apply this knowledge? This isn't just about knowing things. It's about actionable insights, right?
Absolutely. We can distill a few key takeaways from yesterday's brief that have broader relevance. First, strengthen climate resilience. That record number of EU civil protection activations, it's a massive wake-up call. It underlines the urgent need for more investment, not just in responding to disasters, but in adapting to them. That means better cross-border cooperation, hardening infrastructure, rethinking urban design for extreme weather.
It's about building resilience before the crisis hits.
Precisely. Second, monitor geopolitical flashpoints with agility. The Middle East remains incredibly tense. For businesses, this means actively mapping potential supply chain disruptions, maybe hedging against energy price spikes driven by political uncertainty. You need to be nimble.
Third point.
Strategically diversify supply chains. We saw it clearly with the China to Indonesia shift driven by tariffs. The lesson for everyone is to really understand your vulnerabilities. It's not just about cost anymore, it's about geopolitical resilience. Explore those alternative manufacturing hubs, maybe look at nearshoring. Don't rely on single points.
Right. Beyond the purely economic or geopolitical.
Fourth, champion accurate global representation. That Correct the Map campaign might seem symbolic, but it highlights how even basic tools like maps carry historical baggage. Supporting initiatives that promote accurate representation, inclusive dialogue, these things contribute to a more balanced, informed global perspective. It matters.
Okay, and a final takeaway.
Finally, balance investment portfolios for volatility. Those divergent economic signals, strong European earnings versus U.S. inflation worries, they highlight the need for careful portfolio management. It likely means balancing growth-focused assets with more defensive ones. And maybe consider hedging against currency fluctuations, given how commodity prices and central bank actions are varying across regions.
Excellent takeaways. What a journey that was, navigating yesterday's global landscape. From those intense climate events, the tangled economic signals, right through to the geopolitical maneuvers and business shifts. Our goal here is always to give you that shortcut, help you connect the dots you might otherwise miss, and hopefully leave you feeling truly well-informed.
And if you connect all this to the bigger picture, you really see how interdependent everything is becoming. These aren't isolated events, they ripple across the globe. A holistic view is just essential now.
Absolutely. So here's a final thought for you to chew on until next time. How might that ongoing tension we see between global economic integration on one side and rising national protectionism on the other, how might that continue to reshape trade and investment flows in the coming year, especially as climate pressures perhaps accelerate some of those shifts? Something to consider. Thank you for joining us on this deep dive. Until next time, stay curious and keep connecting those dots.